This video is about Sony's FY 2024 full-year financial results, period from April 2024 to March 2025. Sony is a Japanese multinational conglomerate that operates in various industries, including consumer electronics, gaming, entertainment, semiconductors, and financial services. It is best known for PlayStation gaming consoles. FY 2024 consolidated results. In fiscal year 2024, Sony achieved record-high consolidated sales of 12,043 billion yen, an increase of 7% year-on-year. Including the financial services segment, Sony's total consolidated sales amounted to 12,957 billion yen, and net income of 1,141 billion yen, 18% increase year-on-year. The company's operating cash flow reached 1,972 billion yen, mainly due to improved working capital in game and network services and imaging and sensing solutions segments compared to the previous year. The dividend per share was increased to 20 yen, a 3 yen increase from the previous year. FY24 was a strong year, with record-high profits and the highest EPS ever recorded. Impact of U.S. tariff policy. Sony acknowledges that the situation regarding additional U.S. tariffs is rapidly evolving and uncertain. The segments likely to be affected: game and network services, entertainment, technology and services, and imaging and sensing solutions are actively responding to already implemented tariffs and preparing for various possible future scenarios. Based on current assumptions about tariff rates, Sony expects to limit the impact on the profitability of its continuing operations in fiscal year 2025 to approximately 100 billion yen, which is less than 10% of its forecasted operating income. This will be achieved through measures such as stockpiling inventory in the U.S., adjusting global product shipments, and selectively raising prices in response to market trends. Sony will continue to monitor the situation and plans to provide an update on the financial impact during its first quarter earnings announcement in early August. FY 2025 forecast. For fiscal year 2025, Sony expects operating income from continuing operations to remain flat year-on-year at 1.28 trillion yen, even after accounting for the impact of U.S. tariffs. However, net income is projected to decline by 13% to 930 billion yen, mainly because the company does not anticipate repeating the valuation gains on equity securities and reduced tax expenses recorded in the previous fiscal year. Operating cash flow is forecasted at 1.24 trillion yen, 37% decrease, primarily due to the normalization of working capital in the game and network services segment, following a major improvement last year, and an anticipated rise in motion picture production costs. Dividends per share is forecasted to increase by 5 yen to 25 yen. Game and network services segment. In fiscal year 2024, Sony's game and network services segment saw a 9% year-on-year increase in sales, reaching 4.67 trillion yen, mainly driven by higher third-party software sales and favorable foreign exchange effects. Operating income rose by 43% to a record 414.8 billion yen, supported by growth across all categories, except first-party software. In the fourth quarter, user engagement remained strong, with PlayStation MAUs, monthly active users in March, increasing 5% year-on-year, and revenue from third-party software and network services also growing. For fiscal year 2025, Sony forecasts game and network services sales of 4.3 trillion yen and operating income of 480 billion yen, 16% increase year-on-year. In response to new U.S. tariffs, Sony has already taken steps such as diversifying PlayStation 5 production locations and stockpiling inventory in the U.S., with plans to implement further measures as needed based on how the situation develops. Music segment. In fiscal year 2024, Sony's music segment achieved strong performance, with sales increasing 14% year-on-year to 1,842 billion yen, and operating income rising 18% to a record 357.3 billion yen. On a US dollar basis, streaming revenue grew by 5% in recorded music and 13% in music publishing. For fiscal year 2025, Sony forecasts sales of 1.85 trillion yen and operating income of 355 billion yen. Although operating income is expected to remain flat in yen terms due to unfavorable foreign exchange rates, Sony anticipates that the operating income of Sony Music Group, which oversees its international music operations, will grow by a high single-digit percentage in US dollar terms. Pictures segment. In fiscal year 2024, Sony's Pictures segment saw a slight increase in sales to 1,505 billion yen, mainly due to favorable foreign exchange rates, despite a decline in television productions revenue. Operating income remained nearly flat year-on-year at 117.3 billion yen, as the drop in sales was largely offset by currency gains. For fiscal year 2025, Sony forecasts sales of 1.5 trillion yen and operating income of 125 billion yen. On a US dollar basis, excluding the effects of exchange rates, the company expects operating income to grow by about 10%, mainly driven by Crunchyroll, which is a streaming service. Entertainment, Technology, and Services segment. In fiscal year 2024, Sony's Entertainment, Technology, and Services segment experienced a 2% year-on-year decline in sales to 2,409 billion yen, mainly due to lower unit sales of televisions and smartphones. Despite this, operating income rose by 2% to 190.9 billion yen, driven by reduced operational expenses, even after accounting for additional restructuring costs recorded in the fourth quarter. The interchangeable lens camera market performed well, particularly in China, where government subsidies helped boost unit sales by about 9% year-on-year in the fourth quarter. For fiscal year 2025, Sony forecasts sales of 2.28 trillion yen, 5% decrease, and operating income of 180 billion yen, 6% decrease. The company plans to operate cautiously this year, focusing on risk mitigation in anticipation of potential market and supply chain disruptions caused by newly implemented U.S. tariffs. Imaging and Sensing Solutions segment. In fiscal year 2024, Sony's Imaging and Sensing Solutions segment achieved record high sales of 1,799 billion yen, a 12% year-on-year increase, mainly driven by favorable foreign exchange rates and higher sales of mobile sensors. Operating income also reached a record high of 261.1 billion yen, up 35% year-on-year, supported by stronger sales, improved manufacturing yields, and currency gains, despite higher manufacturing expenses. In the fourth quarter, customer demand remained strong, and design-in activity for 2025 models progressed smoothly. For fiscal year 2025, Sony forecasts sales of 1.96 trillion yen and operating income of 280 billion yen, expecting growth in both sales and profit due to the expansion of mobile sensor sizes, even though the yen is projected to appreciate. As of now, the company has not observed any impact on customer orders related to the new U.S. tariffs. Financial Services segment. In fiscal year 2024, revenue from Sony's Financial Services segment dropped by 47% year-on-year to 931.4 billion yen, mainly due to lower investment gains at Sony Life. Operating income fell by 25% to 130.5 billion yen, largely because a one-time gain from selling part of Sony Payment Services shares was recorded in the previous year, and profits from variable life insurance guarantees declined due to market fluctuations. Despite this, Sony Life's new policy amount grew by 11% year-on-year. Sony Financial Group. Sony Financial Group, established in 2004, manages Sony's financial services, including life insurance and banking. Originating with Sony Life in 1981, it went public in 2007 and was reabsorbed by Sony in 2020 for closer integration. Renamed in 2021, it focuses on digital financial innovation within the Sony Group. And now Sony plans to spin off its financial services business, creating a separate company. The spinoff is expected to be completed in October 2025, and Sony will retain a partial stake in the new company. Sony will distribute just over 80% of Sony Financial Group shares to investors through dividends in kind, while retaining a stake of just under 20%. This move represents Japan's first partial spinoff under the 2023 tax reforms and the country's first direct listing in over 2 decades. Sony stated that separating its financial and non-financial businesses will enhance capital efficiency and help clarify each unit's business objectives. Measures to strengthen Sony Life's financial position and reduce risks. Sony Life is taking steps this fiscal year to strengthen its financial stability and reduce risks from policy cancellations. To do this, the company plans to replace yen-denominated long-term bonds and reinsure a portion of its US dollar-denominated whole life insurance policies, which currently place a heavy burden on capital. As part of this plan, Sony Life will sell surplus US dollar-denominated bonds to align with lower insurance liabilities. However, this will likely cause a significant drop in pre-tax income over the next 2 years, due to realized gains and losses from those asset sales. These actions are expected to improve the alignment between yen-denominated assets and liabilities, which dominate its balance sheet, lower the risk of policy cancellations on US dollar policies, and slightly raise the company's ESR, economic solvency ratio. Meanwhile, Sony Life's adjusted net income continues to grow steadily due to increased sales of new policies, and the amount available for shareholder distribution is expected to stay stable. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,821 yen as of May 28th, and the US dollar stock price is $26.30 as of May 28th. Over the long term, the stock price has been steadily rising. Current PBR is 2.81, and PER is 24.7. Dividend yield is 0.65%. Compared to recent years, the current stock price appears relatively high in terms of PBR and PER. However, the dividend yield is slightly higher than before. Sony has also continued to increase its dividends, so while the stock price has risen, the dividend yield has increased even more. Conclusion. Sony achieved record-high sales and profits in fiscal year 2024, driven by strong performance in its gaming, music, and imaging segments. Despite challenges in some areas, cost controls and strategic moves helped maintain growth. For fiscal year 2025, Sony expects flat operating income and lower net income due to one-time gains not repeating and rising costs. The company is actively managing U.S. tariff risks and plans to spin off its financial services segment to boost capital efficiency. Overall, Sony remains financially strong, with steady dividend growth and a positive long-term outlook.